All right, welcome back for the episode of Carnivore Trades. Today is Wednesday, November 1st, 2023. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find me on carnivoretrades.com for swing trading alerts and analysis and live day trading as of Friday morning. So I have some more details on that tomorrow. Anyways, let's get into it here today. So markets finishing up, spiders up 1% there, triple Q's up 1 3/4, and the Dow up 2/3%. So a decent day overall. Obviously, that not telling the story. We had the FOMC today. We had jobs data this morning too, coming in a little bit colder than expected on the ADP number, but that wasn't really the headline. And honestly, to me, people are going to make a lot out of the Fed, but to me, that was even lesser of the headlines today. So if you recall yesterday's video, I talked about how very suspicious the price action was, specifically in volatility the last 2 days. And I kind of speculated that maybe that had to do with the yen a little bit. Maybe the market was front-running yen intervention. But what came out this morning was essentially Yellen moving her issuance to the, basically, I think they reduced their issuance by about 2 billion, which 112 versus 114 is nothing. But the duration is what matters. It was coming from the long end. We take a look at the TYX here, and we can see it's no secret. There's been a rout, right? And that's been pulling liquidity out of the market. If we look at the spiders, we see a lot of liquidity coming out of the market starting in July. And that's really when the TYX put in that kind of last pivot there and started to push higher, right? So it's no secret that correlation is key. Why it matters that it's going to the short end now is that when it comes out of the short end, a lot of it can come out of reverse repo. So that means it's not coming out of the equity markets. It's coming out of that repo facility. Ipso facto by the market. That's what that means. So more liquidity, good. Less liquidity, bad. And you can see here the futures this morning. It didn't even react much to the ADP number. This big pop was at 8:30. That's when ADP was at 8:15. It didn't really do much. Let's look at that big surge at 8:30. That's when that news clipping released came out. Look at the ZB here, big pop, right? So market really liked that. I talked about this on Twitter. First time on ZB, you've got higher lows and higher highs on the daily. You got to go back to really like March. So you never really had higher low or higher. You had a higher low attempt here. It failed. You didn't even make an attempt here. You bear flagged. You went down. You had a potential high that failed. So we now have that reversal of trend here. We've talked about the RSI. Nice divergence there on the ZB weekly. And you can see it on the monthly too. So again, the short bond trade, pretty crowded. That's no secret. I've talked about that. And like I've said recently, the bond market's just dying for like any sort of good news it can get its hands on, because this is a coiled spring. When there's so many shorts, piled in, this is kind of what can happen. But in any case, market's liking that. Powell today basically wouldn't say anything. Obviously they paused. That was priced in, and he wouldn't say anything about stopping. I think the market at this point figures he's going to stop. I think he's going to stop. I don't think that they have any reason to continue hiking at this point. But bottom line here, what does this really mean for the spiders today? I think it's likely that the lows are in. So as of yesterday, I still said I would have liked 405, and I still would have liked that. And the reason why, I'll show you, is it's a 50% fib, but we got more than 50% below the 382. So usually when that happens, you're going to kind of go to the next level, plus those pivots down there. I just would have felt better if we had satisfied that. But right now, I was kind of looking for a bottom around this time period. And I do think, you got good volume, good uptick in volume today as well. So that does signal, add some validity there. But we also closed back above this pivot low, this breakdown bar high. So that's definitely bullish as well. Did not get above the 200. So that, that door kind of got left open a little bit. But I would say as of now, as of yesterday, it was more, I would say like 70-30 that we're going to go down to 405. Now it's closer to 60-40 in the opposite direction, I would think. So I think it's a lot more likely there's a low in. That doesn't mean you FOMO and buy it into the 200 moving average. This is going to pull back. You're going to get flags, pullbacks, etc., higher lows, but that's kind of what I'm looking for here. Kind of going into the end of the year. That doesn't mean that can't fail. So again, I'm saying it's like 60-40. Again, the yen is still very much a problem here. We had a pullback today, but all this was a little inside day. It's not like this, it's not like this reversed that whole move. It's just a little pullback day. I do think this wants to pierce double top. That might freak the market out a little bit. Maybe that's your catalyst for a higher low. Certainly could be a thing. We're also seeing volatility, 1, 2, 3 days down in a row. The VIX is down like 20% in the last 3 sessions. I think even more than that. So that may get a dead cat bounce. I would expect the bears to show up at the 200 moving average, possibly even the 20. So there is some resistance in this area. There's a gap fill at 423.63. So there's some resistance in this zone, but it'll be important to see where the market reacts and how it reacts. If we can pull back and put in a higher low, I think there's a good chance that it can hold up. If you get some type of a catalyst, there's geopolitical stuff going on too, now vol's really cheap. So, that's certainly something to look at. But I would say at this point, it's likely if we had closed, I told my members this today too, if we had closed, I've seen them and I've seen stuff like this happen before where you get a big pump and then you just close like, pennies below that resistance level and that reaction high, or at least the previous local high. That would have been a massive red flag. And right now I would be telling you I'm expecting a gap and go to the downside tomorrow. But not so much the case. And we closed basically right at the highs of the day. So I'm going to give the market the benefit of the doubt here. Additionally, another level I was talking about, I know I don't show the NQ a lot, but I like this level really very much so, 14.6. We did close above that as well. Next resistance there is 14.855. Coinciding with that 20 period moving average. For those of you who follow the triple Qs, again, it's going to be right about 360. And then there's a gap fill at 359.13 right in that vicinity. So we'll watch and see how the market reacts. But right now, they defended that 382, right? So I talked about that last week. Got really close to the 200. I would have, and this is another reason why I wanted 405 on the spiders, is because it probably would have coincided with this level on the Qs, right? Nothing to say that can't happen. We still technically have lower highs and lower lows here. So there's nothing to say it can't roll over. I'm not going to rule it out. But with today's close, I'd say it's less likely, just so I want to make that clear. But big move there for the Qs. We did close above this bar here by 8 cents. So 8 cents is as good as any. So that is a close above that red bar. And again, that's another kind of point for the bulls here. So keep all that in mind. Again, don't rule out one more drop. It can happen. I was just saying after today, it's definitely less likely. And again, I think that Yellen leaked that stuff to the street. That's why we saw the VIX get slammed the last 3 days. The market made up its mind Monday morning. And I think Powell, honestly, is secondary, believe it or not. Anyways, Russell 2000 up over 0.5%. So finally getting above that red bar from Friday. Short term, this is going to 169. And that coincides with the 20 moving average, maybe 170. Russell is oversold, due for a bounce here, and it's holding, basically double bottom there. So that's hanging in there for now. And we'll leave it at that there. The Dow via the diamond, again, we talked about the 20 MA. You went up there and tagged that. It may need to pull back and flag a little bit. If it can do that, you can get up into these moving averages up here around 338. 339, again, if it does roll over, there's a ton of support around 320. I'd probably be a buyer there. I don't trade the Dow that often, but I like that level a lot. Anyways, semiconductors here up 2.5. So again, defending the 200 moving average. We talked about this yesterday. If you bear flag here, it's going to become minor. You got a nice outside move. You got to get above this red bar, 143.15 on a daily close. That would certainly make this a lot stronger. It's had a nice day anyway, but that would certainly make it a lot stronger. And then if you can get through, you got some moving average resistance here, nothing super major. If you get through that, obviously your next run is going to be to that yellow trend line. So very simple there. We tested the gap window. Again, there's a fat air pocket there, and they came in in a hurry to defend that yesterday morning. Take a look at the intraday here. They pierced it for about 15 minutes, and then they took it right back up. So That held for now, and you got to respect that. IGV up 82 basis points back inside the wedge. On the weekly, I don't like that we closed below this low here, but it's hanging in there okay. We'll leave it at that. The monthly is still fine though. So let me see, 336.81. Yeah, we closed. Yeah, so we did close above that red bar or that green bar yesterday for the monthly close. So again, technically the monthly is still intact, and you want to go with the bigger time frames there. Short term, 347 area, maybe some resistance on the IGV. Transports here going, guess where? Right back to our trend line, then pulling back off the highs. So still up 90 basis points on the day. Right up there, pull back. Transport's still on the weaker side. Take a look at this pump in the afternoon, right? And then take a look at this pump on the spiders, right? Higher high. Transport just still can't get out of their own way. I'm underwater on some Jets calls. I'm going to lose money on it. It just can't even get out of its own way here. So transport's still a laggard. That I guess could be a point for the bears here. If you hold this trend line, something to keep an eye on. It's not the be all end all, but it's definitely an important industry group, and it's a leading indicator. So transport's definitely on the weaker side, and we'll definitely make note of that. All right, interest rates here. So the 2-year pulling back, and that finished at 4.958. Really here, nothing. Let me flip to the daily. There we go. Really nothing wrong here with the 2-year. Still just pulling back, still just a bigger picture bull pattern. But obviously rates pulling back today. The market likes that. 5-year finally breaking this little uptrend. That can get to around, 455, maybe 450 here in the short term. But that did lose the 20 moving average there. 10-year. Finally losing that 20 moving average. Needs to actually confirm it though. We kind of got below it for a day. You need to push lower. First stop would be the 50, and then of course 435, which I've talked about previously. The 30-year, again, just like the ZB, it's the inverse. The yield's a little bit different than the futures, so you don't have the higher high yet, but it is resting on that 20 moving average. And I generally go off of the ZB personally, but next level, right around 4.75, 50 MA, and then the big level, 445, 448, somewhere in that area there, obviously with that pivot. That is a no-brainer. All right, housing here, XHB here, up 3% a day. What a surge there for the XHB. Again, I really would have liked it if you got down to, 68. If we look at this, you're going to see, there's a reason why I say this stuff, right? There's your 50% fib. We got really close and then just kind of went no man's land and got a bit. Now, again, I told you guys there'd be support around 70. There was. We did pierce it by a little bit, but I would have just liked 68, So they got really close. Some of these, maybe they're watching these videos. The Qs got close to that 382. The spiders got close to the 50% fib. XHB got close to the 50% fib. I don't know if these guys are watching the videos or something, but, sometimes that happens. Nonetheless, you did go into that pivot, big outside move up, and actually, closed just above that 200 moving average there. So that was able to reclaim that. Near term, you got a gap right here. After that, we'll just say 76. So those are going to be the near term levels there for the XHB, but big outside move there for the home builders. Again, rates coming in on the long end, that's going to be good for those home builders, right? VNQ getting a bid, nothing great though, right? Still very weak. Up just 45 cents on the day. And I don't like anything this is doing. You guys know that. The monthly, losing that 200-month moving average on a close is not good. Again, the only thing that I like about it is that it's so beaten down that you could make a case that everything's priced in that's going to come, and it is coming. So XLF here getting a bid as well, up 21 cents, stalling out at the 20 moving average. We'll see what this does here. If this can put in a higher low, you can work your way up to 33.50, and we'll leave it at that for now. KRE only up 16 cents, nothing crazy here. It's got to get back above this trend line here, which, I guess you can make a case it is. Yeah, it is right now. So we'll give it that for now. But let's just say you got to get back above this pivot. So right around 40 bucks, especially on a weekly close, that would help the pattern much more. KBE, 36. KBWB getting a bid today, only up 6 cents though, nothing great. You guys know I don't like that either. Broker dealers, where'd it go? Just above 470 and pulled back. That can still get to 475 in the short term. and then we'll talk about other levels later. You know, higher low, maybe around 456, 455, we'll say, if it does pull back. If it goes lower, you guys know it's 440. Crude today taking a little bit of a dump here, so lower low on that. Watch this trend line. That's in play. We did lose the 100-day moving average. Didn't close below yesterday's low, so that's your small positive there, but I don't like how you rallied up and then faded the whole move. So not a good sign there for crude futures. You could make a case this is a head and shoulders here. I think the neckline's a little too steep for me, but you know, you could make a case it's a pattern. But this trend line nonetheless should be some support there around 78 to 79. Yeah, right around 79 there. You also got the 200-day sitting right below that. Probably not a coincidence. If you get through that, though, it's right down to that 74 handle. XLE here, that actually finished red, so kind of a gap and crap there. You know, definitely a weaker stock today in an up tape. Again, this has been kind of a positive yield trade, so maybe that could be something to do with it. Obviously, crude was red on the day, so that helps as well. But again, if this puts in a pattern sideways, this could set up for a move to 82. So I'm avoiding this for now. Just not worth playing right now. XOP, again, this is in no man's land. I don't like the lower high. Again, there's still support at that gap around 138, but I'm not doing anything with it. OIH, I don't like this pattern. You get another couple of days of sideways action here, this can go down to that $200 and possibly $300 even round number very quickly. So be careful with OIH here. CCJ just continues to hold up 14 cents on the day. Still looking at weekly consolidation there, and the same thing with the URNM. That is holding up well and continuing to get a bid, and it's holding those moving averages. Trend is up. Nat gas pulling back down 7 cents on the day after the big surge yesterday. Like to see some consolidation here, and then a move towards $4 is next. We have inventories tomorrow, so that is a little bit of a wild card. Sometimes it's up, down, and all around on those days, but overall the trend is up, and I like the weekly pattern here. Dollar index. So again, the market seems to be a little disconnected from the dollar right now. So the dollar down just 3 cents on the day. It actually was green. I want to say that must have just happened here because on the Forex close, yeah, the 3 o'clock close, it was still green. So it did fade a little bit towards that final hour. But point is, it's still holding up. You're holding trend. Trend is up. We did test 107 again. We pulled back in, but really nothing wrong here with the dollar chart. Absolutely nothing wrong. So that, again, is a point for the bears. If these weekly MAs catch up, and this is still going sideways, I favor a move for the dollar much higher. So just be aware of that. You start to take out this pivot, then we can look at downside targets again. You guys know 104.50 is a big level for me. But right now, the dollar is not acting like the market was. The dollar's not acting like the triple Qs were up 1 3/4 today. I'll put it that way. So little disconnection there. Sometimes that can happen. But again, we'll just look at it level by level. Gold pulling in, again, a little bit of risk off. So gold coming in a little bit. I told you guys if the fear trade kind of subsides a little bit, you might see gold pull back down 0.5% or just under 0.5% on the day. On the GC, near term, we'll look at this level here. There's a lot of moving averages in this range. So right around 1940, somewhere in that area, 1950, and then 1900 will be support. If we consolidate, it's going to 2050. Trend is up. Silver here down just under a penny, nothing terrible there, still consolidating. Platinum pulling back as well. Nothing to do there unless it puts in a bull flag, which it may do. And then palladium, you guys know that still needs to go lower. Copper holding up okay. You guys know that's going lower as well. Bitcoin here looks a little tired. He had a nice little pump earlier and it came back in. Again, it's still holding up really well. Take a look at the intraday. Big pump and then came back down. I don't know if it was a bit of a liquidity grab there, but it's still managing to bounce here in the after hours as well. My only issue is that a lot of this is up on kind of that ETF news. And that tells me once it becomes fact, it could be a sell the news. But right now it's hanging in there okay. I don't really have any updates for you. Pattern is fine. As long as it holds up and consolidates, there's really nothing wrong with Bitcoin here. Okay, lastly, let's just take a look at the spiders again. again, no close above the 200 MA. That's not the end of the world for bulls. What I like is you closed above these two levels. You did it on volume, and you did it while changing trend in the bond market. So that's a positive there. I do think that it's more likely now that we're seeing the lows put in here. But keep in mind, those targets, I have them there for a reason. And as I showed you in the video here, none of them really got hit. And there's still geopolitical stuff going on. There's still problems in the yen. There's still commercial real estate. There's still lots of weakness in regional banks. A couple of good sessions doesn't necessarily erase that. Maybe it can put it on the shelf for a while, but keep that in mind. I can't rule out a move down to that level, at least not right now. But at this point, I'm going to give the market the upside bias, and I'd probably be looking for higher lows or some type of a pattern to play this on the long side. That's kind of my bias right now. Anyways, guys, going to wrap it up here. You guys take care. Come find me on carnivoretrades.com. I will talk to you guys all tomorrow.